Greetings, market rebels. Welcome to this week's sector situation video. It is Sunday, October 15th, 2023. It's about 20 to 1 here on the East Coast. I'm Wayne, and I'm going to flash through things as quickly as I can because I'm doing this as a backup. I think there may have been a problem with the recording or the sound or the video. So unfortunately, I'm not sure what got caught up there, but I have a suspicion something might have happened there. So here's our trusty disclaimer. Here's our trusty intellectual property rights notice. And then just so you know, if you want to take a snapshot of this and screen cap or what have you, there you have it. That is from Macro Measure. And it is this week's stream that I covered. It might be helpful to have as we go through things here in sector situation. And I think that's good enough. And I'm going to reposition things. So just bear with me. And I will move us over to stop the share. We've got to move over to screen 3. I'll start out with our 12 sectors. But what I'm going to do is really bring up what I did last time around, which I may as well start here. So the first thing I want to say really is that I think the way the week ended is concerning. This is the Magnificent Seven. So you probably all know what that means at this point. And this did try to break out. It could not hold, and it's on support in my book right now. So a little bit more weakness, and this thing will be breaking the short-term support. Could be at the 100-day, that dashed white line quickly. And that's your 1750-ish roughly. So if you want to put this package together on your Thinkorswim or what have you, your other platforms. But if that does fall below there, I think that's really where the danger begins. That starts to put it towards the danger zone. And the reason I'm starting with this, other than the video issue, is just because make sure this is recording again. But the reason I'm bringing that up is because this is one of the few things holding up the market. In one sector that's holding up the market, along with the big dogs we just talked about, of course, is SMH has probably been really the focal area because of the AI situation, and that made a lower high potentially here. So if this one rolls over, a lot of those big names could be rolling over. The shine may be coming off that whole AI trade that a lot of these big companies have benefited from, and you could really see SMH coming off as well. Now, I don't know if that'll happen. The second half of October is typically rough, of course, but it still is above the rising 10-day in white there, and above the 20 there in light blue. So if that were to fall, though, this would be, I think, a sign, as the Magnificent Seven falling would be a sign. And XLK and XLC, obviously, these are all sort of related, right? Those have a little bit more of a problematic or challenged view at the moment, where they've got lower highs put in on XLK and lower lows. And if you start rolling down and testing the recent low in these sectors, right, then really the leadership areas that I think show that the market is acting well and healthy, they're in trouble. They're really in trouble. This got close to in XLC to the all-time high, I believe this is over here, and it couldn't get there, and it started falling apart pretty big. Now, I think this was due to I'm sorry, I shouldn't say the all-time high. I'm not sure why I said that, but I meant the recent high right on the recovery trade from last October, which I think those lows were right about there. So let me just bring a little more data in. Yep, that's where the lows were. So, or early Nov actually, but the market itself was maybe more of a mid October last year. But once this thing finally got going, it really got going. And so it's right below your high. This time was right below there. So that's a little concerning. You could be back in the danger zone. And once you crack below, once these things get near the danger zone, and if that stuff starts cracking, then your leadership areas are gone. If XLC, XLK, SMH, the Magnificent Seven, if all that stuff starts to really lose its luster, then what are you going to point to? I think pointing to the XLE screaming higher isn't really something I would say is a sign of health right now. And that's because I think the consumer's already really under such pressure. And then you're now going, then they would then add to that, right, the squeezing of the consumer even further, probably to the breaking point with higher energy costs. So there's your XLE. That did look better. I'm sorry, that's your SMH with the lower highs and maybe lower lows, and it's at risk of maybe rolling over like so many things look like they could on Friday. And then here's your XLE. And so that could end up breaking out. And we just have to keep our eyes on that. But again, I think that's more of, okay, I think that's inflationary, clearly. And even if it isn't, with all the chicanery that goes on, where they try to say that higher energy is an inflationary, I've actually seen that get spun that way. I don't know how you can say that, but that's how some people argue it. It just runs against, I guess, common sense for me. But this to me would be rough on just extra rough stuff on the consumer. Going back to things, what I would say is, look, these are hanging in there still, but they did take a pretty ominous turn late in the week. This to me moving up is, again, hurts the consumer. If you want to see what the economy maybe is doing in terms of shipping, that is horrible that XTN made a new low in my book. I always look at this stuff. So discretionary, which was really hanging in there, versus staples, Staples are already near, right, the most recent low, and so are the discretionary stocks as a package. So nothing's really technically oversold. For me, XLP and XTN are close enough to say, yeah, they're pretty much oversold or very close to it, obviously. But there's more room to fall in almost everything else. There's nothing on these RSIs that says, yeah, these things can't fall further. So I think this is really the stuff that I saw last week is not good. Especially right if these lower highs are put in, or there's a false breakout in the case of XLC, and they roll this stuff over right back into these recent lows that I'm kind of pointing out quickly. So that's going to be rough stuff to see them fall and those come under pressure. So keep your eyes on those. Keep your eyes on, I think, your yields. You can look at TNX. You can look at dollar DXY to see what the dollar is doing. I think it's been pretty clear that the market trades not tick for tick, but fairly inverse to what the dollar and especially the yields are doing. But it's both of them, tend to matter and tend at this point in time are kind of moving together. So that's pretty much, I think, telling you which way you should be looking for opportunities if in the market, and stocks usually are going to catch up or catch down to what the dollar and the yields are doing by the end of the session or the next few sessions. But right, if things were roaring, you would think, okay, materials would be doing better. They're not far from the recent low. There's a gap they could fill. Same thing for XLI. It tends to be a little bit more move around a little more highly priced than XLB. That is a session or two away from maybe threatening to close the gap that it left down there as well. So I think there was a concerning complexion going out. And I want to emphasize a few other sectors here while we're at it. So we can take a look quickly at the oil future. And I think that the oil future started to confirm what we're thinking in terms of XLE, that it's close to breaking out. And by the end of the week, the oil future really didn't trade. Wow, really getting delayed here. How come? There it goes. But you were kind of dawdling around in the future, but you could see Friday there was a surge, and it took out that resistance line that I drew in the earlier video that maybe did not record properly. And then you really only have the 20-day left. So that could be right back towards highs quickly. Same thing, I think, with XLE, right? It would probably follow if oil futures are surging. Let's look at XLRE. XLRE, this is your really more of the commercial real estate. And this didn't have the horrendous week, but that other things did. But it did start to lose its luster a little bit towards the end of the week. So it's, excuse me, excuse me, it's at a place where it's holding for now, but it could be back below all SMAs, most of which are downsloping pretty quickly. And so it did have quite a good run to get back all the way back up here as well. So be careful on that, because I think XHB, they're not perfectly correlated, but I think XHB is telling a slightly different tale. It's already in the danger zone. And you can see that this low is just above that purple 200 in XHB. I hate this switches to percentages. Boy, that's frustrating. I'm sorry about that, but it seems like every video I try to throw a level out and it's already on percentages. And because I'm focusing on the chart complexion, I don't see it right away. But you can see you're really close to the recent lows, right? You're about a point away, roughly speaking, and the 200 is there in purple. You can see the downtrend, right? It's intermediate term is down. A lot of those longer term moving averages are still rising, so it does have that going for it. But there's definitely some serious risk there. So I'd be careful in there, because if that starts falling apart, remember my whole argument for why I wouldn't fight against it when it was moving up. We did eventually take a trade in it, but we were trying to embrace the trend of, like we always do, almost all the way up, despite the fact that we were thinking that there's no way this could sustain itself forever, right? We just couldn't buy into that, at least. But to me, there's still more downside there if this starts to come into more in line with what I think is reality out there. So I do think there's definitely some risk there. You can see the lower highs are getting put in. You're really close to making another lower low, intermediate term trend change, and that could lead to more retracement of the whole rally that went on from really the October bottoms all the way up through the highs that were put in, I guess, in July. And so related to that are wood and cut. And wood doesn't tell us much right now, but I think cut sort of shows you that that's the timber in wood, and then this one here is the other alternative timber ETF, and this one had a rough kind of more of a rough finish to the week, I think, and it's not far from what I would call the danger zone, near the low, like the lowest low we've seen. So that is not trending all that well right now, as you would expect it, to be. And so those sections I think are worth noting, because I've been saying for the whole whatever year and a half that this to me is the key to, maybe even longer at this point. This is the whole key, because it's become such a big part of the U.S. economy. About 70% is the estimate of the U.S. economy really comes in from is driven, I should say, by home construction, right, and home buying and everything related to it. So it's become really one of the biggest things. And if that's not firing because the Fed is over tightened, it's a problem, right? It's really a problem. So it really could put a drag on things, not just itself, but many other things. And I think that's what you're starting to see. So I think you've got to be really careful there. And I think the other big story, besides, right, what this getting vulnerable, besides the leadership areas maybe taking a turn for the worse, we're a little early on saying that they are, but they certainly did not finish the week well, as we saw with XLK, XLC. But the other big story of the week, of course, is what's going on with this sector here. And I've been more of a patient kind of bear on the big picture stuff here for a while, because you can see the trends just aren't supportive of being, I think, really bullish on this, even though I own it and I would buy more if it would correct more. But it took a very strong leap, and I think we have to pay attention to that. This sector can flare up and get really quickly, and it can get really wild. And it's not easy to trade, but in my opinion, but it's really close to that resistance line I drew there in white. And then you've got the 200 up here in purple that's a little bit above the 150 in rust. So that level up there is probably, for starters, where you really have to at least get above there. It's pretty hard to argue that you're in a real strong bull market when you're not even above the 200 day, right? That you think you're, hey, this is really bullish. But there was some paper, maybe a tiny bit more than a trickle in UOA Pro. I've got some ideas in there now. I still can't buy into it fully. I wish I could. I know a lot of people want this sector to start performing better and keep their eyes on it. And I think that's smart, but I still need to see more work out of it to really have it do better. And unfortunately, I think that were it to do better, that would mean probably bad things are happening out there around the world, which, it's hard to cheer for, but it's the reality of the situation. Here's your future. Here's your future. And you can see that really finished the week strongly and really, really leapt up, after being like on the lower Bollinger and really jammed. So that's why I'm taking this seriously, because it seems like risk between this, the VIX, energy moving, like it seems like, and then there was like a drop in yields because bonds rallied, or at least the early part of the week. It seems like there's that sort of flight to safety hedging mindset that crept in a little more, and with the VIX holding on to its gains for the most part on a Friday, and perking up just below 19, that for a change it didn't turn tail and retreat. So that kind of montage of things suggests to me that risk is being taken more seriously. Remember, for macro measure, the second half of this month is typically rough, right? It's typically rough. So we really can't, with the way that things closed out in the market on Friday, we really can't be surprised. I think the surprise would be if things suddenly become stellar to the upside, right? And that would probably be the surprise, and you can't rule it out. But I just think the way that things shaped up towards the end of this week in the market, not good. And I think that a lot of people started taking that a little more seriously, just from what we saw, what we looked at. But getting back to it, we can take a look at GLD. I'll look at SLV, and you can see, GLD. Come on. Ooh, it's giving me such a hard time. But GLD, very similar, right, to the strong performance out of the gold future. SLV, right, it's similar. Now, these still have work to do to really reverse, I would say, the longer term downtrend. But this was a big step forward. I don't want to read too much into one good week, but this was really powerful in the way that they came off of this, and the paper at least showed up to a degree. So I think it's worth keeping an eye on, worth mentioning. You can see the silver's lagging, not really, in a way, not really doing much. Probably didn't have as strong of a day, but it's pretty similar, right, to the gold chart. And then if you look at, say, the alternatives like GDX, the gold miners, this ETF also had a stronger finish to the week. You closed near the highs of the week, and then the GDXJ did the same thing. And the gold futures, I think we noted that, but the gold future also, right, GCZ23, that also, right, is where it is, and it looks pretty solid. And what I would add to that, and I'm going to do that, and I guess we'll close out on that, is so you can see that's just so strong there on Friday. I don't want to read too much into one day, but that really is a strong candle, right? That's strong, one of your strongest performances, probably the strongest performance we've seen, right, since this maybe became more of a focal future that folks are trading. Let's get, I know what I wanted to do. So I wanted to bring this up right here. And here's your GLD, just because we've got a lot of time. And you can see that this is very long-term oriented. This is over 12 years of a cup and handle forming, if you're willing to go that far. And so this pattern to me is a pattern that's fairly prominent. I mean, they show up, and they're pretty powerful when they fire, and they're usually pretty good. So I would keep an eye on this. That's my take on cup and handle patterns, just having seen so many and watch what unfolds in the aftermath. But this held at the similar low that it did earlier in the year, and they're really close to trying to break it out up and through the initial resistance. And we have the line on the other charts, but I'll just put one here. And I think you can do this and I'll get a better line for us. I kind of clip those highs, but this is very close to, I think it's very close to breaking out, and from the intermediate term downtrend. And if it did that, then, you know, the next area, really big area, is near the highs, right? And I think that really comes out to about $2,000 an ounce, just psychologically. So I think it has to get this to be taken seriously and think that this thing could be on the verge of firing. You need to see that. But if this turns out to be, right, a higher low, right, than here, and then you start taking out the highs, then you really do have an intermediate term trend change and a firing, really like the firing of the pattern starting to occur. So that could be very interesting if that were to happen. So again, silver, I don't think I have to draw it, but I'm pretty sure it looks similar to it. Just we'd have to probably frame it a little bit more, and it's not exact, right? But you can sort of see the sort of cup and this extended handle, if you want to call it that. A lot of people probably would buy into it, but it almost has like another cup with a handle that's more recent, that's smaller as well. But you can see that, and again, this is a pattern that when it does fire, it fires pretty big. So again, I don't think that would be great for the world, but again, that's beyond, you know, us. We can't do much about that, but it is worth noting because I think it's something that it could be a smart hedge, you know. And I don't see the long term flipping around more favorably yet. I think it has to do more work, but if it does flip around, there could be some real fireworks there. So as I said last week, I think what you could do is you could just be a hedger, right? You could partial your way in and get some of it. If you want to think about it like dollar cost averaging, get yourself in on some. If you are concerned, you think it's prudent, and then add more if it takes off, right? Unfortunately, you would probably not want that, but you could do that on more of a breakout, or even better, if we could hopefully fall apart and you come down even lower and it lets you add from lower levels, then you haven't bought your 100%, right? Because we don't really fire here. It ends up not firing. It looks like the potential's there, though. We never know, of course, ahead of time if it really will. But as I said, I think with a little more action, a little more upside action, it's going to be really on breakout watch of the shorter, more intermediate term trend. And then it would need to do more work to really flip the big trend around. But that would happen. I mean, I can't think of things more of a time where it seems like there's enough news on the table right now that could unfortunately metastasize into even worse news that could help this space. So I just wanted to spend a little extra time on it. So again, as always, I hope something I've shared with you helps you out this week or some week in the future. I want to thank everyone for tuning in. I hope you got something out of this. I want to wish everyone a great conclusion of the weekend, a great week ahead. I would say discipline dictates action. Your discipline will get you through this. You know, be smart and nimble, because I think we're about to hit a volatile phase. In other words, the volatility will persist. And I'll just send out one link. We'll just get one video uploaded, but if the prior one did not work, at least we've got this one. We can substitute out for it. I think there might have been a glitch on the other one, though. So thanks again, and have a great conclusion to the weekend.